Good afternoon, everyone. My name's Tim Ward. I'm the financial advisor here at FWO Chartered Accountants, and welcome to today's webinar on personal insurance. Today, we'll be covering off the types of cover that are available to help protect you and your family from the unknown risks which we are all exposed to in our lives. With personal insurance, most Australians have adequate car and home insurance. However, many people overlook the importance of insuring themselves. Research commissioned by the Institute of Financial Services Australia showed that only 4% of Australian families with dependent children have adequate levels of insurance cover. So this effectively means that Australian families are critically underinsured to the tune of approximately $1.37 trillion, which is quite astounding. Research has consistently shown that Australians don't take out adequate levels of insurance to protect themselves and their families. Reinsurer Swiss Re conducted international research which demonstrated that Australia is one of the most underinsured nations in the developed world, ranking in 12th for life insurance density and penetration. So while most Australians insure their homes and cars and fail to insure their most important asset themselves and their ability to produce an income, people fail to realise their working life, in the value of their working life, which supplies the capital that fuels their lifestyle, not just now, but well into the future. So today we're going to be covering off the types of personal insurances. So we've got life cover, total and permanent disability or TPD cover, trauma, critical illness cover, income protection, and business expenses insurance. Firstly, life insurance. So life insurance works by paying a lump sum if you die or become terminally ill. Essentially, this lump sum can help with areas such as repayment of debts, covering future needs such as the cost of children's education or long-term care, and providing funds for an investment to generate an income or to keep your business afloat. So some of the leading causes there at the bottom of the slide there, we have cancer, heart disease, and respiratory diseases. Moving on to total and permanent disability insurance, or TPD, as it's commonly referred to. With total and permanent disability insurance, you're paid a lump sum if you become totally and permanently disabled. You can then use these funds for medical bills, to make home modifications, and also generate an income if you can't work again or return to work, or even assist with ongoing expenses like paying off your mortgage. So the leading causes for claim for TPD are musculoskeletal, mental disorders, and also cancer. Now, with total and permanent disability insurance, there are broadly two types of definitions. Firstly, you have own occupation definition and also an any occupation definition. Any occupation definition means that you are unable to work in your usual occupation or any other occupation for which you are reasonably suited by way of education, experience, or training. And conversely, when you've got the other definition of own occupation, which states that you're unable to work in your own occupation. Basically, the more generous definition is own occupation definition, and effectively you do pay more for it because it is the better of the two policies. Typically, people own occupation TPD cover inside superannuation, and one of the main reasons for this is that it allows the ability to access the funds in the event that you do become totally and permanently disabled, as you would also meet the SIS Act regulation that you are permanently disabled. Next, we have trauma insurance. So with trauma insurance, it provides you and your family with a tax-free lump sum if you're diagnosed with one of the defined serious medical conditions or undergo certain medical procedures. So some of the leading causes for claim are cancer, heart disease, and neurological disorders. Typically, with trauma insurance policies, there are upwards of 40 different types of trauma events which are covered, and you also have partial claims whereby you can also receive a part of your lump sum benefit in the event that you have a partial trauma event. A good example of this would be in the event of a melanoma, you can claim for a partial lump sum there. Next, we have income protection. So income protection will provide you with a monthly benefit if you are disabled or unable to work due to accident, sickness, or injury. So some of the leading causes for claim for income protection are musculoskeletal, cancer, and mental disorders. And lastly, for the types of cover, we have business expenses cover. So business expenses cover offers business owners the financial assurance that if they become disabled and cannot work, that their fixed business expenses would be covered. So the types of fixed business expenses include rent, property rates, fixed telephone and mobile, gas, electricity, and any salaries of employees who do not generate business income. So this is an extra, if you like, for self-employed business owners who are looking for that extra level of protection with their business in the event that they are unable to work. Some of the other considerations that are taken into account when talking about personal insurance cover, essentially, is the life insured an employee or self-employed? That has some ramifications as to what types of cover you get clients. The ownership structure of policies, be it inside superannuation or personally owned. And lastly, child cover. So in the last 5 years or so, insurance companies now have the ability to allow you to include your children onto your policies and for a lump sum cover. So in the event that they suffered a trauma event, they too can also receive cover. And typically to qualify for that child cover, your children need to be between the ages of 2 years of age and 18. Moving on to this next slide, what we have here is a chart that demonstrates the life stages and insurance needs for individuals. So what you'll see here is the 5 life stages at the top. You have young singles and couples, then moving along to young family, middle-aged family, pre-retirees, and then retirees. You'll note that young singles and couples typically are building a career, have no dependents, and have short-term debt. Then young families will typically have a mortgage, starting a family, and have young children. And then middle-aged families will have their mortgage reducing, children close to finishing school. And then we have pre-retirees who typically have no debt, are not working, mortgage almost paid off, low debt, children independent, and large surplus income. And then lastly, retirees who have extinguished their debt, no longer working, and income is being produced from their existing savings and superannuation. This red shaded area is representing the income and debt levels as you move through the life stages for the average person. So You'll note the purple line here. This represents the life and TPD insurance needs as people go through their life stages. Also, the trauma insurance needs as people work through. This is represented by the green line there. And lastly, we've got the income protection line. So you'll notice that the income protection light blue line here is linear. This is because our income protection needs will not diminish as we move through our life stages. So we need to protect that level of income as we go through our entire working lives, as opposed to your life and TPD insurance, whereby our need decreases as we get closer to retirement due to reducing debt and less dependence from your children financially, so they become financially independent themselves. So this is a good chart just representing insurance needs for the average person as they work through their life stages. Today I wanted to go through sort of the top 6 myths, if you like, or demystify the top 6 myths that are common, that I get asked, and people in the public want to ask about insurance. Firstly, life insurance companies do not pay claims. Now, this table here that I've put together outlines the total Australian retail insurance claims for the calendar year ending 2012. So you'll see this amount here of total amount paid, and there was approximately $4.4 billion in claims paid to clients for the year 2012. So that puts that myth to bed. You'll also note, which is probably a good indication of how important income protection is here, that of the total number of claims of over 70,000 there, 40,000 of them were representative of income protection. So just over half of the claims for the year of 2012 were for income protection. Just another point to highlight the importance of that type of cover. With your life, TPD and trauma, you'll see the amounts here. There's $500 million worth of trauma benefits paid to claimable people. You've also got TPD of 700 million, and we've got nearly 2 billion in life claims. So every working day, an average of 17.6 million was paid to Australians. So that first myth of life insurance companies not paying claims is a myth. The second myth is that life insurance is too expensive. Now, for just $1 a day or $365 a year in premium, this is the levels of life cover that you would receive. So for a 30-year-old male, you'd be able to get 416 grand of life cover, and for a female, you'd be able to get approximately 776,000. So as you get older, obviously, your risk increases, and therefore, for the same dollar value of premium, you won't be able to access the same level of cover. However, just to highlight, as a 40-year-old spending $365 a year on annual premium, for a male, you'd be able to get $380,000 worth of life cover, and for a female, $590,000. So I've just made the assumptions here that the male and females, both in white collar occupations, both non-smokers, based on step premiums and paid annually. And just to go one step further, I just thought I'd include life, TPD and trauma cover, so the 3 lump sum covers, and just to highlight how much $2 a day would cost for certain levels of cover. So we've got here, for a 30-year-old to receive $291,000 worth of life, TPD and trauma cover, and a 30-year-old would receive $291,000. and a female would be able to access $311,000 worth of life TPD and trauma for the $730 a year in premium, or $2 a day. Same again with it, my assumptions are based it on male and females in white collar occupations, non-smokers, stepped premium, and paid annually with own occupation definitions. The third myth that I wanted to cover today was people who state that I'm young and healthy, so insurance doesn't apply to me. Life insurance can help people of all ages and all walks of life. It's not just for parents with children and a mortgage. Even if you're young, single, and healthy today, insurance is important to help protect your lifestyle or your independence and cover your debts in the event that you need to. So insurance policies like income protection and trauma cover can help cover the bills, rent or mortgage, medical expenses, and continue to fund your lifestyle if you cannot work because you get sick or injured. The typical case is someone who's recently left home. If they become sick or injured without having cover of income protection or trauma cover, they may have to move back home, which financially puts a strain on their actual parents. So that can happen. And by having income protection and trauma cover for those people, they can alleviate that risk. The fourth myth that I wanted to cover off today was, thanks, but I have enough insurance cover in my super fund. Whilst people do have cover inside their super fund, they probably do not have enough cover in their super funds. Some people may have life insurance or death cover through their super policy, but on average, people with cover through super have less than half the level of cover they need. Insurance through super also usually does not give you access to income protection or trauma cover. It's typically just for your life cover and sometimes for your total and permanent disability cover. And that is about it. So we need to look at what you're actually covered for, and your super fund doesn't necessarily cover you for everything. The fifth myth that I wanted to cover was, I'm covered by private health insurance. So private health insurance provides valuable protection against medical expenses associated with sickness and injury. However, it is where it starts and stops. So your private health cover will not cover your bills, debts, or replace your lost income if you've taken an extended period of time off work due to sickness or injury. Private health insurance may also not cover the total cost of your treatment or rehabilitation, potentially leaving you with a gap that needs to be paid out of your own pocket. A perfect example of private health cover leaving you out of pocket is that a lot of the cancer medications or medications that help patients recover from cancers, a lot of them aren't covered on the Pharmaceutical Benefit Scheme, or the PBS, which allows the government to subsidise the cost of those medicines. So by having adequate trauma cover, you can actually, in the event that you did get sick, you'd be able to pay that gap and mitigate that from being a real issue for yourself in the event that you did suffer a trauma event. Lastly, the sixth myth that I wanted to cover is the government will look after me if I get sick. Now, the government through Centrelink, it does provide financial assistance for people who suffer serious disability. However, but the disability support pension, it doesn't really go far enough, and there are rules around who is eligible for it. So I just wanted to highlight some of the shortfalls with the disability support pension and that reliance on the government. So the current rate for the disability support pension for for a single over 21 or a person under 21 with children is $733.70 per fortnight. Now that equates to approximately $19,000 per annum, which is approximately a quarter of the average full-time annual income of an Australian, which is at the moment about $72,000 a year. So this small amount of benefit that you get from the government, and remembering that you do have to be eligible for it, goes nowhere near in providing for the average Australian to replace their income or continue their lifestyle. So this next chart really highlights that. What I've assumed here is that a 40-year-old who has gone on benefit or has become disabled and is eligible for either income protection or the Centrelink disability support pension, what are the benefits that they would receive over the period of disability to age 65? And what this highlights is the $19,000 a year approximately of index that over the next 25 years, if you like, and that person would only receive a tick over 500,000 cumulatively over that period of time. Whereas had that person had sufficient income protection and they were protecting an annual income of 80,000, they would have been able to protect their future earning capacity. So you can see here this blue line over those 25 years. It's allowing them to protect their income of over $2.5 million. So it's quite a substantial benefit that they're protecting. And I think it also goes to the heart of the issue that people in this situation, they're also protecting that future ability to earn an income. So it gets overlooked quite easily, but it's a really important thing to take out of today, that the ability to earn an income in the future is probably one of your greatest assets. So what do we do here at FWO? So really our goal with implementing a comprehensive risk plan for our clients is to ensure that they get the right amount of money to the right people at the right time. So to get the right amount of money, that's to ensure that they've got adequate cover, they've got the correct level sums insured to pay out the right people. So those right people are their respective spouses and children and dependents, and at the right time. So that's ensuring that the money gets paid to the right people at the right time, so immediately. With the different structures that you can have with ownership, that'll dictate at the right time. So it's all about getting the right amount of money to the right people at the right time. So by having a comprehensive risk plan, you'll be protecting your family's financial security and lifestyle in the event of death, injury, or sickness. So that pretty much concludes today's presentation. I just wanted to offer the chance now to anyone that want to ask any questions. Feel free. Just type in on the right-hand side there where it's indicated that you can put in a question, and I'm happy to answer any questions for today. So please outline any questions that you may have, and we'll go from there. But I'd like to just thank you all once again for attending today, and just see if we've got a few questions coming up. got a question here from James, and thanks, James. James has asked, what are the benefits that are covered under, what are the trauma events covered under the critical illness and trauma? Thanks, James. Just to go through some of the detail, if you like, with the trauma benefits and the conditions covered. So you've got heart conditions, you've got heart attack, coronary artery bypass surgery, cardiomyopathy, angioplasty. So there's some of the heart conditions that are covered. You've also got neurological conditions that are covered. Alzheimer's, dementia, coma, major head traumas, motor neurone disease, multiple sclerosis, muscular dystrophy, paralysis, stroke, and Parkinson's disease. So there's some of the neurological conditions that are also covered. You've also got organ disorders, which are covered under trauma cover, such as your chronic kidney failures, chronic liver failure, chronic lung failure, major organ transplant. And then of course, cancer being probably the largest area of claim. So if I just go back to that slide from 2012, you can see here the leading causes of claim for trauma for 2012 were cancer, heart disease, and neurological disorders. So that just highlights there that half a billion dollars that was paid out to Australians in the last calendar year, that they suffered one of those types of conditions. So hopefully that answers your question, James. If we've got any other questions, feel free to send them through. Well, haven't got any other questions coming through, so I'd just like to take the opportunity to thank everyone for attending today's webinar. If you have any questions or any inquiries as to how you go about getting any personal insurance cover, feel free to give me a call. My number is 0738333999, and my email is tim at fwo.net.au. So once again, thank you all for attending today, and I'll speak to you soon. Thanks.